Hello and welcome. Stocks versus real estate versus stocks. Which one is better? Pros and cons, but more importantly, which one is better for you? The battle of these two asset classes have been going on for ages. You can make a lot of money in both asset classes. The question today is not which one makes more money. The question is which one is a better investment overall and fits your lifestyle and your goals. That is the question, folks. And I looked at many other channels, but I could not find a fair comparison of both asset classes. And I promise that you won't find any other video on YouTube which does such a comprehensive analysis of both. Have you ever bought or purchased stocks or even crypto and slept at night, woke up in the morning and poof, your stock is down, your savings are gone? And believe me, it has happened to me as well. So I took it upon myself to come up with a category, a 25 checkpoint list that will determine which is a better asset class. And the reason I came up with these 25 points is because I want to give a score, a 1 or 0 or 0 or 1 for real estate versus stocks. Why did I do that? Because it makes it easier if you can total up all the results and get a definitive answer. Believe it or not, there is an asset class that fits a certain personality type. Some people are risk averse, some people are risk takers, some people want quick returns, some people want slow returns, and so on and so forth. By the way, if you love my content, if you like this channel, please don't forget to like and subscribe. And if you don't like it, that's okay if you don't subscribe. I really want a smaller community that's tight-knit and support each other versus people who are just hating on each other and projecting negative energy. Sounds good? Let's get started. Hola, ¿cómo estás? Konnichiwa, ni hao, salam, namaste, kaif halik, salute, privet to all my friends all over the world. Welcome to Entrepreneur Extraordinaire. So approximately 50 or 55% of people in this country, in the US, own stocks. However, in real estate, there's 60 to 65%, almost 64% currently in 2021, who own a piece of real estate. So let's begin. I'm gonna post a score 1 or 0 up top for real estate and stocks. And then I'm gonna bring up the questions at the bottom so you guys can follow through what the question is. So the first one is, great returns in a good market, right? Obviously, stocks takes the lead on this one because, stocks can give really amazing return. Think about 1998, right? Stocks were on fire, things were doing great. But then it dropped and it crashed, and the crashes happen in any market. That's fine. So definitely a 1 up for stocks. Real estate on the other end is different, folks. A bit more controlled growth, even though in the past few years it has gone up 40%, but that doesn't happen in the past 30 years history of real estate. So if you see real estate, you'll see the real estate doesn't go as high, but also doesn't drop as low. So I will give also 1 up to real estate on this. Now, stocks have lower startup costs. You can just download an app and start investing, like Robinhood and other apps that are out there. Webull, I think, is another app. You can start with $100, $50, maybe a few $100. You can't do that in real estate. So this is a 1 up on stocks. In real estate, you really need some money, although I would argue that you can borrow other people's money, which is also called OPM, right? OPM means other people's money. You can have that and not invest your own money. Real estate rewards people who actually have knowledge. For this one, just to be fair, let's just give 1 up to stocks. Next up is insider trading. Insider trading is not encouraged in stocks by any means. And we know what happened to Martha Stewart, right? So insider trading is a big no-no. You can't have insights in a company. On real estate, it's different, right? In real estate, you can have information from a county or a city where the next Walmart is being built, where the next Amazon office is being opened, before it even comes in the news. And you can have certain advantages, and that's totally legal. So in real estate, I think the ground is a bit more fair. So we'll give a 0 for stocks, but we'll give 1 to real estate on this one. Number 4 is essential or non-essential. Which is essential? Obviously, real estate is essential. You can not, I'm sitting in a house, right? It's an essential asset. I cannot just live on the street or on a tree, right? I can, but I would not survive for too long. But nonetheless, it's an essential asset. Stocks is different, right? It's not a non-essential asset. It's a nice to have. So we'll give a 0 to stocks on this one and 1 to real estate because this is a very clear-cut victory for real estate. Number 5, prices of stocks are inflated, often inflated. And if you look at the market, even now, Facebook, Tesla, a lot of companies are overpriced, inflated, worth billions of dollars on paper, but they haven't produced a single profit or produced a single product. Look at Rivian, right? Great technology, but we don't know how it's going to do in the market. Real estate is different, generally very predictable, right? You can look at past 30 years and see this specific property was worth maybe 200,000, and now it's at 250, and you can certainly gauge a fair market value of the price. So to be fair, we'll just give a 1-on-1 to both stocks and to real estate on this one. Okay. Rate of return. This is of my favorite favorite topic, folks. And how much rate of return can you get in stocks versus real estate? And I will tell you this, I'm a little biased when it comes to real estate because real estate uses leverage. If you have $100 or $300, for example, right, how much stocks can you buy? You can only buy $300 worth of stocks. But real estate is not the case, folks. If you have $300 or $3,000 in this case, for example, you need a little bit more in real estate, you can buy a $300,000 property. You have massive amounts of leverage. Now, I will play a clip for you from Dave Ramsey. I know some people are going to say he's old school, but that's okay. Let's at least hear what he has to say about the rate of return for real estate.
Generally speaking, you would make a lot more rate of return on real estate, but it involves more hassle than just buying a mutual fund and throwing it in the drawer and forget it.
Real estate. But for this one, I think it's a clear-cut winner for real estate just because the leverage is so much high. People are buying buildings with not much money, with other people's money, as I mentioned, OPM. So number 7, we're on number 7. Wow, we're rolling along, right? Thanks for hanging in there with me. Number 7 is, can you borrow money and buy stocks? Can you go to a bank and ask for a loan? Well, you can't do that, right? You can't do that. In real estate, you can. You can go to someone, a bank or some resource, and ask them for money, and they will give you the money happily. The government supports these programs. The city, county supports these programs. They want you to buy houses. So this is a clear winner for real estate, 1 for real estate, and 0 for stocks on this one. Another one which really shows the strength of real estate, folks, is that can you take out equity from your stocks? I know you can move the stocks from your Roth IRA and personal self-directed IRA, but can you take out those stocks, without paying penalty and taxes and all that, and use that and still hold that stock somewhere? You can't do that. But in real estate, you can. And here's how. You have a house that has $100,000 equity. Guess what? You can take out that equity tax-free. And you can invest and buy another property with that $100,000. So 0 on this one for stocks and 1 for real estate. Okay. So number 9, we're at number 9 now. So how easy it is to find a deal? Well, for stocks, it's easier, folks, because you can be sitting in your comfort of your home and you can go research online, find a company and come up with a good stock for that company. And you can see the company's history as well. With real estate, it's a lot harder, folks, because you have to research a lot of properties. I get about 200 deals a month. And from those deals, I have to pick one. But this one definitely goes to stocks. Number 10, you can have an unfair advantage if you know a lot about the company, right? For example, Warren Buffett is a great example of a guy who's created and changed the stock market in many ways, and he's on board of many companies like on Apple, on American Express, on Kraft Cheese, and so on and so forth. So Warren Buffett has insider information, although it's not legal, but he technically knows a lot about the company, and he's pouring billions of dollars in these companies, right? So it's an unfair advantage because an average Joe can't compete with that, folks. However, in real estate market, an average Joe can compete with you by using other people's money just based on their knowledge, right? But to be fair, we'll just give a 1-on-1 to both, right? We want the stocks to come along. So let's keep the battle competent and give 1 to each on this category. Number 11. We're almost there, folks. Number 11. So can you bargain on a stock? Can you say, well, Apple, your stock value is $300 per share. Can you give it to me for $200 or $250? Can you make an offer to Apple? You can't do that. But in real estate, you can. You can go make all kinds of offers, lowball the offers all day long. And sometimes you get lucky and they give you the offer. So negotiation is part of real estate, folks. When the house inspection happens, you can negotiate all kinds of things. So I think it's a much more flexible class. So this is a clear winner for real estate is 1 and 0 for stocks on this one. Now this one is my favorite. Types of growth, appreciation, some sort of passive income is also possible, like dividends and stuff. But dividends, some people don't know this, but dividends can be taken out of a company. The company can reduce your number of dividends or eliminate dividends, and that can happen in many cases. The company may go down under, but still we're saying that there is appreciation, there's definitely growth in the stock market. We're also saying there's some sort of maybe small amount of passive income because dividends don't really pay you $12,000 a month. But in real estate, you can, right? In real estate, you have appreciation. You can also do depreciation, cost segregation, cash flow, massive cash flow. Personally, I have a building that turns up $12,000 cash flow in real estate in a building. It was just one property. How does that happen in stock? So this is a clear winner for real estate because there's massive amounts of appreciation and types of appreciation and depreciation, and other kinds of cash flow. You can't really compete with that. So 1 for real estate on this one and 0 for stocks. Now another one, let's talk about taxes. Taxes is one of my favorite topics, folks. And if you need any help with taxes, go to entrepreneurextraordinaire.com. You can have all kinds of tax consulting services, filing your taxes, giving you tax advice for businesses and for personal and for couple and families. But for taxes, right, once you have stocks and bonds, you sell them, unless you move into Roth IRA or something, or even personal self-directed IRA, you really don't have as much tax breaks, folks, in stocks. And I know that because I have a lot of clients who've invested in stocks. I myself have stocks that I never take out, never sell them, because I'm scared to pay a hefty tax amount on that and lose money that way. In real estate, it's the opposite, folks. Real estate is called a tax heaven. Talk to Donald Trump and he will tell you what kinds of taxes you can save, right? There's massive tax savings. You can establish a trust, you can have a business entity. It's not possible in stocks to do that, Now let's take a second to listen to Robert Kiyosaki in his video, what he's talking about real estate and taxes, okay? Because taxes are a key for real estate.
It's unbelievable, the tax benefits in real estate.
Yeah, and that's why Hillary was going after Donald Trump. He said, well, you don't pay taxes. And he says, that means I'm smart. But they don't teach you this in school, but they'll tell you put your money in a 401k.
So for this one, a clear 1 on tax breaks for real estate and a 0 for stock. Transaction fees, let's talk about that, right? So obviously low transaction fees on, and some are even free, like Robinhood app, right? You don't have to pay a broker any fees, and you can have a small transaction fee and you can trade stocks that way. So definitely a clear edge for stocks on this one. In real estate, you have to pay the broker, do some marketing to sell the house. So transaction fees a bit higher. So I would give this one to stocks for sure, a 1 for stocks and 0 for real estate on this one. Number 15, we're almost there, right? So stocks in general, right? Unless you're a day trader, I'm not talking about that, but even if you're not a day trader, folks, there is some stress involved, right? There's some stress involved because you're dealing with a lot of money, especially. I'm not talking about like somebody investing $100, $200. I'm talking about at least a few thousand, $4,000 or $5,000 or more. There's some stress involved because, again, the company can go under. Elon Musk can launch a tweet and all of a sudden Dogecoin, goes down, or even Tesla stock goes down, and then he gets taken off the board as the CEO. So high stress environment. In real estate, such is not the case. It's a very stable investment long term. So certainly in this category, that real estate is a lot less stressful than stocks. So 1 up for real estate and 0 for stocks on this one. Number 16, you're banking on control. You're banking on the company to hire the right people, to hire the right managers to keep the company growing. You're banking on Walmart, McDonald's, Amazon, Apple, Tesla, and Facebook to keep growing over 10 years, to keep your money in their pockets, right? And it's benefiting the company because they keep growing or they not keep growing. But if they hire the wrong people, if the company has bad strategy, if Tesla produces a bad car and the car crashes and the autopilot or whatever system doesn't function, I know one because I just ordered a Tesla, so I know a lot about the company and I've invested in stock for Tesla. But something happens, I can just kiss my investment goodbye, right? But then you have no control over that company. You can't just influence unless you're Warren Buffett sitting on the board. You really don't have any control. However, in real estate, you have a lot more control, folks. You can control your own property. Okay, you are in control. You're the king. You're the CEO. You understand, what needs to happen with the property, who needs to be in it, how it needs to be rented. You can hire the right realtor. You can hire the resources to keep that property growing. And so that one goes definitely to real estate for 1 and 0 for stocks. Number 17, this is my favorite. Can you increase the value of your stock? Well, you can't, right? You can't just go to Apple and say, well, oh, by the way, let's build this camera technology and increase the value of your stock. You can't really do that, right? You have no control. Again, you have no control. But in real estate, you can. You can buy a house or a building and double, triple the value of that assets, folks. This is the most wonderful thing about real estate that I keep telling people, and I will someday write a book or something or a course that I can teach you guys. You can increase, you can add a bedroom, for example. That's a simple example for you guys. You can add a bedroom, you can add a bathroom, and then increase the value by $20, $30, $40, $50,000. I've seen people who've increased rents, and the cap rate of a building, and the building sold for $2 million more than it was purchased for. And that can happen only in real estate. So clear winner for real estate on this one and a 0 for stocks. Okay. Can you pull tax-free money out of stocks, folks? And I'm not talking about the small amount you can put in Roth IRA. Can you pull, 80%, 90% of your stock value, tax-free? Can you do that? You can't. You just can't. In real estate, you can. You can put up to 80, 90% of the equity from your property. And did you know it's tax-free? You can even sell your house after living in a house for 5 years up to $500,000. You don't pay any taxes on it. So this is a clear one for real estate, 1, and stocks 0, unfortunately. I'm sorry, guys. I know stock is losing right now, but wait a second. There's going to be a time when stocks will go up, okay? Number 19, folks, we're almost there. Can the government or city, give you any benefits or incentives to go and invest more in stocks, right? Can they do that, right? Can they give you any breaks? They can't. They can't do that for stocks or bonds or crypto or index funds. Doesn't matter, right? But in real estate, it does. The government, the county, the zoning, the historic preservation department, they're all in support. They want you to grow. They want you to buy and build the communities around them. They want you to grow those communities. They want you to build schools. They want you to build shopping centers, shopping malls. County is offering free government grants and money. Such is not the case with stocks. So this is a clear winner for real estate for 1 and stocks for 0, folks. So number 20, if you want to win big in stocks, you have to take higher risk, right? You may buy some crypto that's going 1,000% up, right? And you can lose your money the next day. So high risk, high return, low return and low risk, right? You want to buy Apple, it's not going to grow at the rate of Ethereum or Bitcoin. However, in real estate, I think generally the returns are pretty predictable, right? And that's the good and bad of real estate, right? The returns are predictable because the market doesn't go up and down like this, only except, in the past few years, I've seen one big recession, which was in 2008. Aside from that, it's a very predictable market. So because of the risk factor, I'm giving a 0 to stocks and a 1 to real estate. Number 21, folks, we're almost there. So essentially, real estate is a tangible asset, right? You can touch and feel it. You can sell it. Even if it burns down, you have insurance. You can still have the land, and you own the land. Land has value. But in stocks, such is not the case. If the company goes down under, you're done. You are done. Your asset is gone. Your house is burned down. As in the stocks, in this case, your company is gone. Stock is on paper, you're a stakeholder, right, or a shareholder, but it's just on paper. And in crypto, the same thing. You're a digital asset holder, not a real tangible asset that you can give to someone like maybe gold and silver and other stuff like that. So clearly a winner for real estate in this one. Essential versus non-essential, tangible versus non-tangible. A clear winner for real estate on this one. Number 22nd, we're almost there, folks. Diversification. How much diversification exists in stocks versus real estate? So in stocks, obviously you have ETF, NFTs, you got index funds, S&P 500, you got dividends, you got all kinds of different stocks, categories, right? Penny stocks. But essentially many different diversification strategies and assets within the asset class of stocks and bonds and crypto, right? And there's crypto, of course. In real estate, the same case, right? In real estate, the same way. You have commercial, non-commercial, you have shopping centers, shopping malls, you have gas stations, you have houses, residences, you have buildings, you have apartments, you have condos, different categories. So 1-on-1 for each one on this one. Number 23, this is really interesting because I'm not dealing with a landlord or someone when it comes to stocks and bonds, right? You don't have to call a tenant or your property is not vacant. So a clear winner on stocks on this one. In real estate, you have tenant issues, you have landlord issues, the county may bother you, stop work, and so on and so forth. We have to take them to court. In my 10 years plus years of investing, 10 to 15 years of investing in real estate, I've only had one bad tenant like that. Otherwise, I never had these issues. But it does happen to people. So this is a clear winner for stocks. Number 24, stocks and bonds, and often companies themselves, Tesla, Apple, doesn't matter which, Toyota, car companies, they're all heavily dependent on Congress and Senate and how they make the rules and policies. For example, Trump may fire a tweet, right? And what happens then? The stock of Toyota goes down because there are tariffs now imposed on foreign imports, right? Same thing happened with German cars, back in the day. So presidents can have a lot of influence, politicians can have a lot of influence on companies, what I'm saying, on the stocks and bonds market. Such is not the case with real estate, folks. If there is any impact, for example, if you have tariffs on China and the granite comes from China, you can go buy the same granite from India and vice versa. There's a reason why Apple does more business and keep their $200 billion cash overseas in Ireland, not in the US, because they don't get the tax break. So what I'm saying is that I think it's a 0 for stocks, but 1 for real estate when it comes to that. Now, last but not the least, right, you can use leverage in real estate. In real estate, the beauty of real estate is that you can really use OPM, other people's money, and make a lot of money. People have built 400-unit apartment buildings not using their own money. The investors don't really care about you bringing in money to the deal, and people don't understand that. Investors care about you knowing the knowledge. Can you be the project manager? Can you deliver? Can you hire the right contractor? Can you build this building for me? Can you sell it? Do you have connection with the realtors and the mortgage bankers? Can you do that? If they see that in you, if they see the knowledge, they're willing to give you the deal. They're willing to give you their hard money loans out there. You can't do that in stocks. You can just go to someone and say, well, you can of course raise a fund or something for stocks to build a portfolio, but that's separate, right? But nobody will give you the money unless you've proven record or you have a big, hedge fund or something where people give you millions of dollars or hundreds of thousands of dollars to invest just based on a deal. But in real estate, you can do that. A clear winner for real estate on this one, and stocks is 0. So the overall score, unfortunately, is 8 for stocks and 20 plus for real estate, folks. So, I don't know what to say to people who were banking on stocks to win this battle, but to me, a clear winner is real estate. But I mean, let's forget about the scoring and all that for a second, right? Because a score is a score, and this was a fun game we played. But I hope you guys got to see that I was pretty fair. And even if I were to move some of the categories towards the stock market or the stocks and bonds and index funds, real estate just has way too many benefits and stability and predictability to build generational wealth. And it's not just me saying it. You can hear Robert Kiyosaki. And so let's talk about the next topic, which is which one is the best investment for you to fit your best goals. And I have a wonderful answer on this one, folks, that will surprise you. So if you can handle stress, if you're a risk taker, if you don't like dealing with people, if you don't care about tax breaks, okay, stocks is for you. If you're digitally savvy, okay, if you like to work from anywhere, if you have emotional patience, you can hold off on not selling the stock even though the stock is down and you're under stress that you're going to lose your money, but you can hold off for 5-10 years. If you can do that, then for sure, stocks is your game, folks, because you're a high risk taker, you have the patience, you don't have to deal with people, you're digitally savvy, you can do your research online yourself, you can find out about the company on your own, and boom, you can do that. But on the flip side, if you want, if you care about saving on taxes, if you like dealing with people, if you have to take county or a tenant to court, you're okay with that. If you want higher cash on cash return, if you want high rate of return, if you want stability, if you want a bit less stressful lifestyle, because you can always hire a property manager, deal with tenant issues. I've done that many times. So if you want that kind of lifestyle, then real estate is your game, folks. If you want generational wealth, and you want passive income and cash flow coming in, so you can quit your job and just do this full time without, working too much, then real estate is your game, folks. So, a lot of people who think real estate is hard or you have to have a lot of money to be in real estate is just not true. It's just the lack of knowledge and understanding of real estate, folks. But I have a portfolio of about 25% of my wealth in stocks and bonds and mutual funds, and about 5 or 6%, I would say, in crypto. So I play on both sides because I've been doing this for a long time, but I keep almost 70% of my wealth in real estate because of cash flow reasons, because I want to have the cash flow, I want to build equity. And so I hope I was fair. If I missed any of the categories or the facts or factors that could contribute one way or the other way towards stock versus real estate, please drop a comment and a like so I can respond to your comments and I can get back to you in a timely manner. Once again, thank you so much for watching the show. Until next time, have a fantastic day.